The changing landscape of the housing market in Las Vegas requires a real estate professional that understands how to get your offer accepted, willing to go above and beyond for service and accountability. Hi, my name is Dan French. I've been in the real estate and financing industry for over 13 years. Most real estate agents struggle with answering their phone. Please call me directly, 702-557-6176. I'm available for all your real estate needs.
Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
And what's going on, everybody? It's Dan French. It's a Saturday, and we have a great show for you guys. Thank you guys for tuning in, whoever's out there waiting in the waiting room. I'm your host, streaming live, and we have a half studio, not a full studio. We got a gentleman coming in. He had some issues with some fluid somewhere in a car. I don't know, mix up. I don't know what's going on, but we'll get the story when Brett gets in here.
Did he put the gas in the oil?
You're right. So, guys, you guys know this is the most real and behind-the-scenes information on financing, real estate, money talk happening here in Las Vegas. I'm your host, Dan French, and I want to talk today a lot about what's happening in the markets, as we always talk about, you know, monetary policy, fiscal policy, what's happening. What is the aftermath of having all these programs, these trillions of dollars that was passed through Congress? And is this part of the reason why we're having inflation issues, right? Yeah. So we really need to talk about that. I also want to talk about what's happening in the housing market and where we're at today. And do we see prices continuing to come down? And also, is inventory continuing to go up? And what is the aftermath, right? Where do we see the inventory heading? I think a lot of people out there have housing affordability issues, and they're looking at how can I, sustain or afford a home today and sustain that mortgage payment, those costs. You know, looking at year over year, inflation is 9% for the average American. I think it's a lot higher than that.
Yeah.
And so we're going to talk a lot about what's happening today. Also, mortgage applications continue to decline. All right. This is the third week in a row they've declined. We're looking at 7% on that. And, rest in peace on refinance mortgage applications because, I mean, year over year, we're down 80% on refis. That's just,
I can believe it.
I don't even know what a refi is anymore.
If
you guys don't know, this is Mr. Doug Liebig.
Yes.
I got it right. Mr.
On,
Doug Liebig. What's going on, buddy? How are you?
Good. How are you doing?
Oh, we got Mr. Brett Ginny up here, too. Let's take him off.
Oh, okay.
So there you go. We got Mr. Doug Liebig. What's going on, buddy?
Oh, not much. We've got a bunch of family in town right now for the weekend for my daughter's turning 21 this weekend.
Wow, man.
Big
21.
Yeah.
So is 18 bigger or 21 bigger, would you think?
Oh, I think it's 21. That's
really?
That's when they start drinking, man.
You don't think she was drinking before that happened?
Yeah,
you know she's sneaking some stuff, man. You'll never know about it. She's,
Well, no, she
won't tell.
Well, here's our policy. Our kids could drink when they were in high school, but they couldn't leave the house. If their friends came over, we'd take the keys.
Right?
Yeah. I mean, that's because they're going to do it one way or the other. We all did, And so we figured if they were going to do it, we are just going to take their keys and then they could sleep it off. I woke up one morning and this guy bigger than me was laying on our couch and had a full beard, and I'm looking down at him like, who the fuck's dad got over here? And
right. So you got all your family. Is your family coming out from somewhere, or where they come? Are they coming out to visit?
They're all coming in from Oregon.
Okay.
Yeah, my nephew and his daughter and my brother and Denise's brother, both her brothers, and
a lot of people.
Yeah, a lot of people. We got about 40 people coming over, so yeah, it'll be a fun weekend.
Yeah, there's some news that came I want to talk to you about because I know you got your ear to the ground. I always say that. Las Vegas, right?
Yeah.
What's happening in Las Vegas. And they're talking about this Halo.car is talking about having, where you don't have a driver.
Right.
It's electric cars driving people around the city.
I'm not a big fan.
You're not a big fan of it?
No, I'm not.
I always think, well, you got the loop that's happening with Tesla right now that's happening over on, I think it's Resorts World.
Yeah.
So they take the loop underneath and they have that as like a private, I guess, area or place to take guests, right, to drop them off.
Right.
What is going to happen with taxi drivers, Lyft drivers, Uber drivers? I mean, do you think a lot of these companies are going to start to kind of go that direction,
Well, it's hard to say, but I know when I worked on the monorail, and the monorail was supposed to go from we went from MGM up to Sahara, and right after that there was plans for it to go to from MGM to the airport. And I know there was a lot of grief going on about the taxi drivers and losing their revenue, taking the people from the airport over to the Strip. So
Yeah.
I think it's going to be a big thing. I think it's going to be. I think taxi drivers are maybe going to be more urban. Maybe I don't know how Uber and taxis are going to work. With all these new things going on, with the.
Well, I think if I was somebody out there and I was like, hey, if I'm driving, I'm not going to say it's going to happen tomorrow. That's just unrealistic. But
I'd say within the next 5 years.
Would you think that's the future?
I think it's the next 5 years.
Well, imagine driving down the road and you just look over and there's nobody driving and you got somebody in the back just reading.
Right.
Or looking at their phone. That's what everybody will be doing.
I don't know if it's going to be like maybe a driverless car, but I don't know that there's not going to be somebody like sitting in a position where they could make a decision because I don't as much as AI is good, I don't think you can program every little instinct. It's like somebody was talking the other day. Hey, Brett.
Hey, look who decides to show. Wait, Brett,
You guys aren't live, are you?
Oh, we're live,
yeah.
buddy.
No, you're not.
Oh, yes, we
Yeah, we're
are.
going.
Are you really?
Yeah,
Yeah.
I just wanted to tell you, we were waiting on another, and Brett, so what ended up happening, man?
Dude,
You
it's
just
like a freaking hurricane out there.
were you just get done with a jog, or what happened?
Had to get an oil change, brother.
Oh, see, I was
An
half
oil
right.
change.
I
What
was
ended up
half right.
happening? Can you explain, or you don't want to talk about
Car is dirty.
it? The car is dirty.
It's like a hurricane down here compared to Summerlin.
Oh,
Yeah.
yeah, it was raining pretty good down
It
here.
was
huh?
raining
Dude,
and the wind is crazy.
We appreciate you coming in,
Are
man.
we
and
seriously live?
We're seriously live, man.
Yeah.
So we're sitting here talking right now about what's
Sorry,
happening.
man, you didn't tell me.
Hey, that's all right. I mean, the show must go on.
All
you
right,
know?
does
I
this
mean,
look
that's
good or what?
I don't know. Let me see. You guys tell me. Does Brett look good here? I mean, he
No,
looks.
I want to get.
See, Brett now he's got to get all dialed in here, and
I'm
he's just
dialed. I
yeah.
know, dude. I'm kind of.
So, anyways, we're talking here about what's happening with it's Halo.car, and they're talking about where they're now going to introduce driveless cars. And
Yeah, I
I was
saw
talking
that.
with him about possibly, this replacing. Which look, man, AI,
Yeah.
electric cars. It's all going to start these computers.
Well, I think it's gonna be here, but here's the thing with AI. Here's the thing that I envision. I don't think you can program every decision that a human could make. Like if you're
You
know what
can't,
I mean?
but let me say this about AI.
Right.
I read this article.
Right.
Well, it wasn't an article. It was a guy who worked for AI for Google.
Right.
And he had retired or quit or something like that.
Okay.
But he was basically saying how they set up an AI program and basically asked them a question and to say, okay, what would be, what is the main religion in like Arkansas? And they would just ask them basic questions about like what would be the main religion in different areas of the world. And it started coming up with things, and they would ask him different variations of that.
Right.
And then after about a month or so, he asked at one time basically a trick question about a religion.
Right.
And the AI not only recognized it as a trick question, but it gave him basically a smart ass answer in return.
Oh my God.
And it
So
was able to decipher and all that thing,
So
in a
here-
matter of like 30 days.
So here's my thing. Okay, you're in a situation where a car, you got a bunch of school children getting off a bus, and the car, for whatever reason, you're not paying attention. The last minute, you got to make a decision whether you're going to hit the car that's right next to you, maybe do some damage to that, or possibly, hit some children, go with another direction. So I mean, it's like
That's what AI can decipher, though. All of that. Like the whole point of AI is there's always going to be human error in anything that's done with humans. Period.
Right.
It may be 1 in a million.
Right.
But there's still.
Yeah,
So AI even shores up those odds even more.
wow.
You know what I mean?
Loss of
To kind of talk about what you guys were saying about the driverless cars. So the thing about Tesla is everybody forgets that you can have all these other EV companies that are coming out and trying to form. But the thing about Tesla isn't a car company. They're a data company. And people need to understand that all the data that they collect and that they keep on receiving from their cars and all that stuff,
Yeah.
they're so far ahead of the game with the data that they have that it's not really a car company, because you can come up with the cars and a game plan and all that stuff. They're a data company, and they're so far ahead of everyone else with that data, people don't even realize. That's where their value is.
Oh, okay.
Well, I also think electric vehicles are still everybody. It's not easily accessible for electric vehicles. The average electric
They're expensive,
vehicle, yeah. You're going to probably start out at $40,000 minimum in a lot of these vehicles because it's scarcity. They don't have enough. I mean, you go on, like I went on to Tesla and I was like, okay, I'm going to think about reserving one of those trucks, you know? And they're like, oh,
badass,
2023, right? But then you got to have you have to put $100 down and you got to be on the list. And the thing is, you know, this was probably, I did it, right? Just to see what would happen, right? It's $100. And this was 3 months ago. I still haven't got a phone call. They're supposed to call you and say, okay, what kind of car do you want? That just tells you how far back.
Well, let me ask you.
Not just Tesla.
Okay, so let me ask you this about electric vehicles. Okay, this is a question I have. What would the resale value on an electric vehicle be if a battery pack or a battery set is like $30,000 to replace?
I have no idea.
And
I know that Teslas get a lot for the resale value. I know that.
And they're only good for like 10 years, right?
I don't know, but
Okay,
listen, I have a client who works for Apple. He's one of their original employees for Apple.
Right.
He owns a Tesla, and he just texted me about a week ago because he lives in Nevada and he likes to do a lot of traveling.
Right.
He's like, I think I'm just going to give up my Tesla because I'm going between here and Reno and stuff like that. And he just doesn't have to come. I mean, it's just the infrastructure's not set up yet, and we're ways off, and it's expensive right now. You know, so that's the problem with it, and especially chip shortage that we've had and the prices of chips. That's really the main thing, especially the fact with EV vehicles. You know, so.
Yeah, it'd be interesting to see what happens in the future because I think
we'll get there. It's just
I honestly think hydrogen is probably going to be one of the things that they're going to actually replace. But
I just don't want to be dependent on oil, man, because we're dependent on other countries. Yeah, which is ironic because we don't necessarily need to be as much. I know, but
we got more oil
we get in the way of ourselves.
I want to bring this up. So guys, we're here and we're going to answer your questions. And as you guys keep going, we really want to have that open door to answer questions. I also want to bring up a couple of things here. And if you guys don't know, I'm a real estate agent out here. So is Brett. And we're going to be setting up a new channel that's going to have all of the property tours that we do. It's going to be combined. It's going to be a real neat channel. So I want you guys, we're going to start promoting that here soon. But that's going to really open up a lot more opportunity for you guys out there to really look at the homes that you guys want to maybe get into. And the idea we're kicking around is Property Land, right? That's going to be the channel name. Property Land.
That's right.
And also I want to bring up too is, if you guys don't know, we have a website here, LV Home Professionals. This is a great place to get started. So I want to pitch this right now because I want you guys to understand that a lot of people are starting to come to this site, register. I understand we're not here to, pressure anybody. Some people register on this site, then I maybe text them and then they call me like a month later, list my house or whatever. There's a process that people have to take mentally before they're ready. Right. And a lot of times you have to see something or you have to build the confidence. Yeah. That's part of this show. You got to get that confidence working with me or Brett. But this is it, LV Home Professionals. Also, we have homes just reduced. We're going to have this list consistently week by week. Home prices just reduced, and also open houses for the week, coming soons, and also listing your home. Somebody just filled this out over the weekend. I'm listing their home. I'm going for a listing appointment. So if you guys have any questions, please let me know. I'd love to help you out. All of these links will be in the comment section. So I wanted to throw those out there. We're going to have an update here on the market. So let's go ahead and dive right into what people are looking at with the inflation report. I want to bring some numbers up here. I think housing affordability is something we continuously bring up as a mainstay on this show. Yeah. And we're going to continue to see that as far as we see prices still going up. Inventory is going up, but home prices are going up even though home sales are starting to decline. We've declined 3 months in a row. So let's look at the inflation numbers. It is a part of where Americans are at. We talked about 9%. Do you guys feel that the inflation numbers that are out there are less than what we are really at?
I think I think we're more. I really do. Because I mean, you look at all the prices, and I guess it was 2012 or what was it? 92. They redefined what inflation was, and they took some of the items for the inflation.
Yeah. Well, we're at a 40-year high for that, so the numbers say that we are. As far as a recession or not, a recession is considered 2 quarters in a row, right? And so the end of July, the end of this month, in like 10 days or whatever is going to be, we're going to find out if we are officially or not.
Yeah.
I know that to me, just like all markets, it's perception. And usually perception is reality despite what real numbers are or aren't. Yeah. Well, look at the housing crash. When everything went to hit that tilting point and came back over,
right.
The numbers before that were right there. Everybody knew what the numbers were, but everyone drank the same Kool-Aid, dude. It didn't matter.
The media was scaring the shit out of
everybody. Yeah, it wasn't
we
until
hadn't had that happen
hindsight
before.
We're like, duh.
Right.
Why did we? Of course we saw that. We just were blind to it.
Yeah.
You can
and
either
it
admit
hadn't
that or
happened
not.
like that before. I mean,
But we all saw the same numbers, dude.
Right.
I mean, how long do we think we can go like this? That's why for the past year and a half we've been talking about the market. It's like, well, what's happening right now needs to happen because how long can you do this? You can't.
Yeah.
Let's talk about the inflation numbers and what the projections are. So inflation is expected to be at 6.8% in 2022, which is declining. They're saying it's declining right now.
Well, what's it right now?
They're saying it's 9%. And they're saying by the end of 2022.
So to give people perspective, what does 9% mean for what's normal?
Well, what normal
2% and low unemployment.
Right. I mean, and it's really Fed monetary policy, and this is what the the government, really the Federal Reserve, really is somebody that really goes in and tries to dive in and really correct this issue. I want to bring this up though. So it's expected to be 6.8% at the end of 2022, at 3.5% in 2023, and in 2024 it's 2.1%. Central banks are going to be dropping from 5.1 in 2022 to 2.1 in 2023 and 1.9 in 2024. The economic growth is really going to decline to 2.8% in 2022, all the way down to 2.1% in 2023. So I'm seeing the effects of higher inflation. I'm also seeing the effects of an economy slowing in certain sectors. But do you guys feel that Americans are still doing everyday things, going on and traveling, spending on certain things, or do you feel like it's still, hey, everything's starting to save? Because I mean, a lot of it is incentivized to have the Federal Reserve want people to save money and retract the economy and slow the economy down. Do you see that?
I think the fear's gone. I think we've been through so much bullshit that I think the fear's gone out of a lot of consumers, and they're adapting, adjusting, and overcoming.
Just takes them a couple months, man. That's exactly what needs to happen. Is people get shell shocked.
Yeah, but can they afford it? That's the question. Can they afford? And I mean, are people just saying, I'm just going to spend, even though I really can't afford it, because this thing's going to correct itself, and we just have faith in the situation?
I don't know of real any indicators of anywhere that I've seen where anybody's said that people are cutting back. In fact, they're saying that's their argument as you look at a lot of financial analysts and they say that's kind of one of their main arguments about why we're not in a recession. Well, I don't see anybody cutting corners. People are still booking vacations. People are still booking airlines.
That's what I'm saying.
Even people are,
the only people are cutting back are the grocery stores.
Yeah, people are bitching about it, but they're still moving forward.
Now Vera brought up a good point here. We had a really high number of repossessed cars.
Yeah, I saw that. that.
And then, is that
Graham?
Hey, you know what? Well,
Stefan.
I don't know who that is, but here's what I can tell you is that an effect? Because I'm just he's making a comment here. Is that an effect of people starting to see the impact of inflation?
The car bubble was the highest bubble of all of them. It was higher than the lumber bubble. It was higher than the housing bubble. It was, if you talk to Graham, Stefan does a whole video on that. I think he came out with the last day or two, where basically there's a huge number of repossessions. But lending laws for cars are a lot different than lending laws for like mortgages. They have a lot less regulation, and they've spent a lot of money in lobbying these last couple of years to kind of just give out loans to whoever they wanted to.
So if you're seeing repossessed cars at a high clip, why wouldn't you think that there would be more foreclosures, especially with the inflation numbers happening? Because everybody talks about, look at 2002 to 5, we had high number of foreclosures in 2008. Are people going to really be able to afford these houses? They're using adjustable rate mortgages in some cases now to avoid payment shock. You're starting to see those become a popular program for locking in your rate. What do you think? I mean, do you think that foreclosures and housing?
I think number one, mortgage lending is a lot more regulated than lending in some other areas.
Yeah, I mean, cars are still, if you got a job, you got a loan. right?
So and
Yeah, but aren't they easier to get into? And they're obviously a lot less
But
in
I
payment.
think number
for the
two,
most part.
number two is the mentality for both. They're completely different mentalities.
Explain that. What are you talking about?
You have a house. That's where you need to live. People
Yeah, you're not gonna live in your
historically look
car,
at that
right?
as gaining equity and growing in value. A car is a car. I mean, at the end
Unless
of the
you're
day.
gonna live in
So
it.
at the end of the day, if I want to go to point A to point B, whether I drive a Honda or an Audi, it doesn't really, other than what
Well,
you think
I
people think,
disagree
it doesn't
with
matter.
that.
But a house, whether you live on this side of town or this side of town, can make all the difference in the world.
I disagree with that though a little bit, and I'll tell you why. Is because
You can't disagree with me.
Well, I am because I'm not going to say. I'm not going to say that that's not the only issue. You look at the housing
I'm
market.
not saying it is.
I know, but you look at the housing position with people. It's probably more of a responsibility, more of a,
Yes,
a marriage.
that's what I'm saying.
Bigger
The mentality.
risk,
The
bigger
mentality.
risk to get into a house, right? So, right.
But you have to be more qualified,
But
too.
I would think they're equally important. Sometimes you're limited to the jobs you have because you don't have transportation. Getting on a bus and going somewhere 115 degree weather
Sure.
and trying to get to
Okay.
work, that's an issue.
So say you got a car that was now too much money for you. You can't afford it. So you lose that car. You can go buy a $3,000 car and still get to work. Can you do that with a house?
Yeah.
I mean, you can go rent, but it's going to be the same payment. It's going to be
Right.
the same. Like all I'm saying is, it's completely different scenarios of what people are looking at it in,
What do you think about it?
and what
It's
happens for the repercussions.
I agree with him. That's kind of what my line of thinking is. Like, you could dump a car. You're paying $40,000 for a car. You could dump that car and go get one for $10,000 and maybe afford it.
Hell, I need insurance money. I'll dump my car.
Yeah, well, that's kind of.
I'm not saying
but
to do that. But.
Yeah, and I think the home market. I think people are adjusting to do what they need to do to keep in their home. That's
Yeah, I mean, I get the side of it, but I can say that when you look at today's world and what you have to, people have to have 2 and 3 jobs just to survive. If you don't have a 2 household income, especially if you're trying to get into a mortgage,
Good luck.
a lot of people need to have a couple of jobs now. So
Well, that's
I can't
the inflation.
see how you're.
So that goes back to your inflation.
Right.
Your inflation, I think your inflation, they say it's 8.6%. I know you got the data on it and everything,
Yeah.
and it comes off but I think, honestly, the inflation is so much higher than 8%. I think we're probably
So
at 20%.
when these people got in these
especially
car
when
loans, was it because they got into car loans they couldn't really afford in the first place? Or is it that all of a sudden their payment got that much more in the car?
Well, no, it's because the price of fuel has gone up through the roof, you
Yeah.
know, so then they can't, and then
But-
they're having a hard time coming up with the insurance,
Yeah.
and then the car
So-
payment on top of that. So, I mean,
Yeah.
That's valid. That's valid.
I think a lot of ways a car payment, when you look at the gas, you look at the insurance, if it's an electric car or not. Electric cars, they have a higher insurance premium. Whatever car it is, if it's a newer car, by the time you have a payment and all that, it's almost close to probably what a lot of mortgage payments would be on an entry level position on getting into a home. I look at these numbers and it's like I see people paying just to drive a vehicle around like $2,000 a month.
Well, and that's the thing, which is the way a lot of car loans are set up now is not what's your payment. It's going to be like, this is not what are you going to pay for the car in the end. And if
Right.
you've overpaid, it's, well, I need my payment to be this every month.
Right.
They'll take that out 7 years now.
Oh, I know.
To make
they'll
your,
take-
okay, well, your payment's this, and that's what you feel comfortable with, but you're actually so in debt on that car and overpaying on a lot of things, but people don't look at it that way.
Well, and then
they
they'll
just look
take
at it as, what are my payments?
Yeah. Well, they take the home loans out 40
Yeah.
years now, right?
Yeah.
So
and
I-
homeowners look at payments too, don't get me wrong,
Right.
but they look at a lot of other factors considered in buying that house besides just the mortgage payment.
I honestly believe
Mike's
that
right
this
in me.
inflation. I honestly believe the inflation rate is probably double what they're saying it is, and I think that's why we're seeing people scramble. But I think people are tired. People have eliminated a lot of the fear. I don't see the fear that we saw back in 08.
Yeah, I
don't
remember
think-
that, man. That's the thing.
I don't think anybody's watching the media anymore either.
Yeah.
I think they're tuning into shows like this. I think they're
Yeah.
tuning into podcasts. I think they're looking at alternative methods for
But just
means
like
for-
shows,
but-
people turn into what they want to hear.
Yeah, exactly. Well, that's
I mean,
exactly
if you
right.
like us, it's what you want to hear. If not,
but
it's
they're not.
you know.
But what I'm saying is the mainstream media, the paper and the media, are like 11%. I saw a statistic on it the other day. It's like 14% of the population watches media, and 11% read the newspaper now.
Yeah.
That's it. And so back in 08, that was a different
Absolutely right.
scenario.
That's a good point.
That was like 70%.
Listen, I
was listening to
remember
the media.
in like
And so it's
2009
scaring
or
the shit out of
2009,
everybody.
2010, they were saying how they just did a study and anybody who was like 30 years or younger at the time, got their news from like social media or
Right.
Facebook and I remember thinking, how can you fully get information out watching the news or TV or what? And now that's how I get all my info. I
Yeah.
never watch news stations.
Yeah, 15 years
You
ago,
know?
that's all I did was I just turned on, turned on Fox or
Yeah.
whatever. I don't watch CNN.
So let's
but-
talk about
You watch
this.
Fox?
Yeah, I watch CNN.
Shocker alert, everyone.
Well, I didn't.
I'm just kidding.
I don't watch it anymore. They're all horrible. They're all
I
horrible.
know.
You know, but back in the day, that's what I. Shocker. Yeah.
I thought you were a CNN guy myself.
Yeah. Right.
All
Yeah.
right, let's talk about this. So let's talk about a couple of programs here that came
Jake
out.
Trepper.
Okay, so post 2020, we had American Rescue Plan Act of 2021. They put out $1.9 trillion government spending. They also had the Infrastructure Investment and Jobs Act of November of 2021, $1.2 trillion in spending. All part of monetary policy, right, of what's going on. That contributed to 13.5 of GDP in 2021. That's a massive number. So
13.5
yeah,
what?
and, as far as percentage of what GDP was of all of 2021, they had it at in 2021 it was at $23 trillion, and that means out of the $23 trillion and the growth that we saw in 2021,
13.5
that was
spending?
13.5 spending from the government.
From there.
Plus you put in all of the stimulus and all of the employment and all
That's
the
what's killing
checks.
it.
I mean, that's helicopter money. I mean, that's where the
Yeah.
inflation numbers come in at. I'm not saying that's the only issue, but you have all those things, and then
That's
you have
the
an
main
economy
issue,
trying to come back.
actually.
Yeah, you have an economy trying to come back. So I feel that, yes, they're starting to see signs that we're declining a little bit in inflation, but you got the Fed's fund rate going on. That's going to happen here. Open market operations that the
I
Fed's
mean-
going to do. And they're going to probably raise the rates again by another 75
I think we
basis
got
points.
another 6 months, man, at least.
I think so too.
I
And
think we got
that
another
was
6
my
months.
argument: is raising interest rates is not going to just turn around in a even though this market did with housing, like it went from 0 to 100 back to
Yeah.
0 within a couple of months.
But-
this is gonna take a few months to correct itself. We're gonna have to see a long period, maybe I'm gonna say 6 to 12 months, where we see rates starting to really bring the economy down. Because I don't see this being a quick, easy fix. It's fixing itself. But, again, what do you think about that?
It has to run its course.
Right.
It does change quick, doesn't it? And our discussions behind the scenes, Dan, I said this to you, you kind of freaked out a little bit. And I said, well, any realtor who sold in the housing crash from 07, 08, this isn't, anything extreme to us. I mean, the market can do that. I've been doing this 17 years. I've seen the market change on a whim 3 or 4 times probably in 17 years. When I say change on a whim, I mean like within 2 weeks. It just goes boom, and it's a completely different market. And it's the same thing, though. Everyone's kind of shell-shocked for a month or two, takes back and absorbs everything, and then they're
Yeah, I don't know what I
Moving forward like usual.
The factors when the market does change like that. I know this time around
it happened quick, man.
It happened quick, but also they printed more money in the last 2 years than they printed in the last 40. So
that's
I
the
mean,
thing, and that's what I've said repeatedly over the past year and a half, which
Yeah.
is when we do finally catch up, and we're going to, like that. It's like anything. What goes up must go down. What goes down
Right.
must go up. Right.
Right.
But the main question was, how's it all going to settle out? Because
That's the big question.
Because this time it's not a housing crash as far as there's people who can qualify for the mortgage or paying cash. But on the other hand, we've printed 80% of all the money we've printed as a country in the last 2 years.
Yeah.
80%.
Yeah.
I mean,
I
don't know, just common sense says that there has to be
for that.
repercussions.
Yeah,
There has to be
absolutely.
repercussions in some way or another with that.
So where does it go?
We're going to find out.
Yeah.
But here's the thing: when we're the king country, when our currency is worth the most and everybody else's currency revolves around us, we can get away with this. But what happens when that stops?
Yeah, and it is stopping.
It will.
Well,
Yeah.
let's talk about that. The Fed was putting in $120 billion in bonds and purchasing per month before, I would say until the last 2 months of 2021. So that contributed to lower rates, people buying homes.
Why does that contribute to lower rates? Explain to people the basics
Well,
of that.
because they're buying into the bond market, which suppresses.
What does that
the
mean,
interest rates. Well, I don't want to get too advanced, but basically it means buying into a specific bond. And if you buy it in bulk, there's an inverse relationship with the mortgage-backed securities and bonds. And then so when you have investors going in to buy these yields, there's an inverse relationship. By buying those bonds, it suppressed interest rates.
Okay.
Right? They continue to put in $120 billion of purchasing every single month, including after COVID, right? So they kept doing this, and this was just to keep rates low. It's an artificial market.
Basically, that's their way of injecting money into the economy.
That's their way to control the
money flow.
The situation, not just the money flow, but the situation of keeping the economy maybe thriving, right?
Yes.
That's part
Keeping
of one
it
of the
healthy
tools.
is keep on injecting it.
Exactly. So now they're not really doing that anymore. So I think you're starting to see the results of that as well. And I wanted to bring that to everybody's attention, is that there's a part of the reason of why we're not seeing rates of where they're at is because the Fed is not really in it and manipulating the economy as much. They're still buying it. Yeah. They're just not buying $120 billion.
They're not in it to win it.
But they're not. Yeah, right. They're not printing money anymore right now.
Yeah, that's the thing.
So it's everything's kind of like tapered
man,
off.
my car keeps on going as long as I keep on putting gas in it.
Right.
But when I stop putting gas in it, guess what?
So when the Fed stops printing money, where do we go? We're hitting.
What's this contributed
Wonder
to?
Road is where we're going, brother.
So where did this lead us, right? Where did this lead us? This led us to rates, national average, got up to over 6. We've seen a decline, like we said, in mortgage applications, right? 7%. Refis are down 4%. So you're starting to see the effects, and it's a continuous week over week, month over month now where mortgages and mortgage applications are declining. And what does that tell us as people in the industry and buyers out there is that obviously people are not looking to buy a house right now. That's just the bottom line. Like some are, and some want to. You look at the rents, they typically follow what's going on with the housing market and what's happening with the prices of homes. Yes, some people are still going to buy because they look at the comparison. They're like, you know what? We still have to buy. It's a primary residence. For the most part, secondary buyers, investment buyers, unless it's hedge fund buying cash, the mom and pops and all these people out there that have options are not really in the market at this point to buy a house. Some are, but that's why you see the declines. And so when you look at the applications numbers, they're not good. I mean, it just tells me that, yes, people are still buying, but it's slowly bringing...
So let me ask you this. Why then are we having such a decline in mortgage applications, yet home prices aren't dropping?
Well, that's a good question. So
I'll tell you why.
Okay, tell me why. Go ahead. I mean, if you want to ask your question and answer your question, go ahead. I don't know who does that, but I'm going to ask a question and answer my question.
IMO, in my opinion.
Okay.
IMO. That's
because the supply still isn't there.
Well,
we're
I
definitely
disagree with
increasing
that.
supply, but I just think, okay, well, let's look at it at a bigger picture. So we already have those initial people right now that were going to list or thinking about listing or in the process of listing that are listing right now. But what about 6 months or a year from now? If you've bought a house in the last 3 to 5 years, why would you put your house on the market unless you had to?
Well, we have this conversation ad nauseum every single week.
But that's all I'm saying is.
But the question is that where are we at today? And I think the question is, you look at the numbers. What we were at 8,000 before.
Yeah.
How far can we go up on inventory? Because you look at the numbers on prices of homes continue, and we'll look at the data here in a second. Year over year. And also month over month, we're still hitting prices of list for the most part. We're going to tell you where it's not. Yeah. The question is how far can we go up on just total inventory on homes?
On resale or
before it starts affecting it?
Well, you're starting to look at
the
builders.
stats when it turns into a buyer's market.
You're starting to look at builders now putting their properties on the MLS too. So now that's actually a part of the listings. Yeah. Okay. So my thing is this is where do we go, right? We're at 8,000. Do you think we can hit 10 or 12,000, 14,000? What do you think is going to happen?
Absolutely, we can hit 10,000, which is the next marker.
That's not in a healthy market, though, isn't it? When you have prices going up, I think it's unhealthy.
As far as a buyer's market,
as far as a market in general, it's not a balance. You have way too many homes on the market.
No, we don't have way too many homes.
Let me say. So if we didn't, then why are we increasing?
You're right. It's not healthy because that's still too few homes. Which is the opposite of what you're saying.
Explain what you're saying.
Okay. Well, I mean,
you can't just give me like a quick, that's just it. And you got to elaborate.
Take what I say, and that's all good.
No, I want to know why you think that way. Like, what is your thought process?
My thought process is this. Back in 2009, 2010, 2011, when 80% of the homes on the market were foreclosures. I think at the most, or it was, and we can all agree that was an extreme buyer's market.
Right.
And I think it was like 14 or 15,000 active homes on the market any given time. But Las Vegas was smaller than it is right now 10, 12 years ago.
Yeah.
I mean, think about the population that we've increased just in the past 5 years. So I don't know what the normal number should be because we've grown so much in the past 5 years. In the last couple of years, we've had such a shortage that I don't know what that equal calculation should be now. But I do know that even 10,000, based off of my experience from 10 years ago, 10,000 is still a little too few, let alone the number of people that have moved here in the last 10 years.
What would be interesting to find out what the break point is between
the tilting point.
The break point where you have not enough homes and then too many homes based on the amount of homes that you have right now and how many buyers you have. Because I think there's still a lot of people moving to Vegas. I mean, I get them. You know, my business hasn't dropped that much, and people are still buying homes, but they're coming in from other places. So I don't know what other places in the country are doing, but maybe we're still cheaper than other places because Colorado or Oregon, even like my sister-in-law was telling me, their house is worth they're 960 square feet and their house is worth $475,000 up in the Oregon Portland area.
I mean, don't get me wrong. I'm not.
So there's got to be a point where you have so many homes in the market and whatever in correlation to how many people are moving in from other states.
I'm just saying I don't know what that number is now because we've had such low supply in the past couple of years and so many people moving here that I'm going based off of 10, 12 years ago. Yeah. And the population we had then, and when we hit 14, 15,000, it was for sure a buyer's market.
Right.
So what I'm not saying that home prices aren't going to go down some and things aren't going to level off. I just think that there's still going to be not that many more buyers on the market than relative to homes that are going to be coming on the market. And I think that's going to be pretty much concurrent with each other for a little bit. Well,
I think the objective is you have to have prices come down. And we see in Las Vegas that prices and price stability is still there. Prices of homes are still going up. I think as you see that, and it's even still going up in this market, even though sales are down, right? So home affordability, I think, is the big problem here. And this is where you guys aren't addressing this, is that if you have an average person out there going and buying a house, we had all these programs and incentives for people to buy houses. Running at Altitude brought in a very good point on, are they going to bring back some of these programs to help first-time home buyers? Well, the average first-time home buyer, FHA, was like 12% of the applications. That's very, very low, right? That means it's mostly conventional buyers or cash. Okay. And so the average American out there that's trying to buy a home, especially here in Las Vegas, just can't afford it. They can't, with the inflation we're talking about, with the rates still up high.
So you're saying we're not addressing the affordability of it, as in, so what you think could be a contributing factor would be affordability. So I agree.
I think that's the main factor.
Listen, affordability always is, but in reality, the unaffordability has been here for at least a year now. And people are still buying homes, and home prices still haven't been decreasing. So if you want to go by that theory, then why haven't we had home prices dropped? And I'm not saying that home prices aren't going to drop. I'm just saying that the affordability factor absolutely has increased, especially in Las Vegas these last 2 or 3 years, 100%. I'm just saying that I still think with the amount of people moving here, for the most part, it's not going to affect the affordability enough. I'm not saying it's not going to affect people, but not to the scale where it's going to move the market down hugely.
Well, here's my thing is that, you might be right, and Las Vegas might be an outlier. They might be an outlier, right, Las Vegas? But I can tell you that the affordability is still an issue. And look, is it a healthy market? No, I think it's still vastly unhealthy because the average person's still coming into this market. So, everybody's like, well, inventory's coming up and prices are going to drop, and now you're going to have that option. Yeah, that might be true, but I think we still need to have rates come down a little bit, and also inflation needs to settle down.
I agree,
100%. I agree. In the mindset of people buying today. So even if we get more inventory, that doesn't mean it's a healthy market. It just means that, yes, there's more options for the current buyers out there, but the home housing unaffordability problem that we have here in Las Vegas will continue to be a problem, and I don't think it's going to stop.
It's not going away.
So what
home prices,
how do you think this is a good market then?
It's the new America. The home prices,
how do you think,
they're not going down, man. This is the way it's going to be.
How do you think?
And people don't want to hear that, or they agree.
Okay, so my question though is, why do you think that this is turning into a healthy buyer's market then? Do you think it's a healthy buyer's market, or do you think it's just, it is what it is?
Yeah, I think it's a healthy buyer's market, and this is based on, well, I'm just going by my personal experience right now, which is if a buyer comes to me right now and they're between 500,000, 600,000, 700,000, even 450, whatever it is, if they want a house, as long as they're on it, we can usually get that house right away, not have multiple offers on it, and we can usually get it below list price. And there's not really any competition. So in that sense, if you can get a house below list price, and you can say 3% below list, 10% below, what you get it below list price, you're getting a lot of the terms that you want, or a lot more of the terms that you want, and you can afford the payment. I think, and you want to buy a house.
Dan.
So the question is not whether I should rent or buy. Is it if you are going to buy, would now be a good time for it? And I say yes.
Well, if you got that Cali money, or you got that money coming from a place, that might be a good time to buy. But if you don't have that money, and
so then when is a good time to buy?
So Dan, I'm a first time home buyer. Okay, I come to you and I say, I want to get into a home. How much is it going to cost me to get into a home? How much do I got to come down? Come in with down, and what are my payments going to be? Is there a program out there that these guys can come in and say, put $5,000 or $10,000 down versus 10% down on a $50,000 or $500,000 house?
There is.
Okay.
Very good question. Now, here's the problem, though. Okay, you're up against people that have cash.
Right.
You're up against people that are willing to come from California.
But they're not doing that now.
But
let me explain. They're coming from California, and they're going through the process, and they're competing, right? Maybe some of these properties aren't going over list, but I'm going to show you guys some numbers here in a second that still in this core of, let's say, 400,000 to 600,000, you're seeing the data. They're still offering above list in some ways, right? So to answer your question, you put 5% down. If you go in and you want to do a down payment assistance program or something like that, I can help you and find a house. We'll go into negotiation. There's even some properties out there, you may even get closing cost incentive. What you have to look at, though, is you're going to have to bend a little bit on what you're looking for. You're not going to get into a turnkey style home. If you're a homeowner out there or want to be a homeowner out there that's going into a primary residence, then the discussion is, what is your why, right? Do you need to get into a house now? If you do, let's go ahead and look. You have to be understanding that this is just a market that, yes, it's softening, but you're still competing in some ways. Now, there is properties out there that we've seen.
I don't see that.
You don't see what?
None of my buyers are competing against any of the offers we put in.
So what is happening with you?
What I just told you.
Well, explain.
If the house comes on the market right away, or even if it's been sitting, first of all, if it's been sitting there for 30 days, a lot of homes I see, they're doing a price drop 1 or 2 times already.
But 30 days is too long. Days on the market's 8 days. So, I mean, if you're sitting
not what I'm seeing at all.
Listen, if you're sitting on the market for 30 days, there's a couple things here. As a seller, you're probably overpriced.
I don't know where homes are selling in only 8 days at.
That's on the data. That's on
that data's behind then.
Okay.
Let's take the last 30 days.
My thing is this, is if the
I'm telling you what I see every single day. So.
Okay, so explain.
I am. You keep on telling me I'm wrong.
What's your experience? Tell me.
My experience is buyers who come to me and want to buy a house right now, whether it's between, like I said, 450, 657, 750, especially between the 600 to 800 price point the last year and a half, those were the ones where people were getting beat out by 40, 50, 60 grand over list price. And they're all going cash, multiple offers. Those, I mean, there's plenty of buyers I have right now that between 550, and like I said, if the house has been sitting there for 30 days, they've lowered it a couple of times. They start at 600, they've lowered it to 650. We can usually get in contract 535, 540, something like that. We're going against no other offers. Maybe, and then we come back for list of repairs. The seller's willing to fix or give credit to whatever it is. And seller's a lot more conducive to things now. Well, and that's my experience.
So I agree with that statement. What I'm saying, though, is those prices of 400,000 to 600,000, which is the entry level. Right. Mm-hmm. That's the one I'm kind of talking about, where if you're in there, you're trying to get into a starter home or a home where, I was just at KB Homes, right? And they have a property over here in Henderson, Auburn Ridge, right? And went over there like mid fours, right? They don't have a lot premium. They have the cost of land, so it's really a lot price. So a lot of people think like, well, what's the premium versus the price? Well, you're either paying for the land or you're paying for having a cul-de-sac, a strip view, something like that. So going into the process, though, if you're talking about that type of buyer,
Right.
I'm not saying that you're not going to get into a house. Things have opened up a little bit. But yes, I think affordability is still an issue if you're moving and you're living here. If you have a lot of money to put down, and let's say you're going through the process, and let's say that you have at least 20% to put down, you're probably going to be able to get mostly what you want.
Right.
It's the decision and deciding factor of, with higher rates, does it still make sense financially with inflation and everything going on to still buy a home? I think if you need shelter, the cost of shelter's gone up, but if you need a place to live, then you're going to have to go ahead and buy into it. That doesn't mean it's for everybody.
I think if you're sweating over an extra $30 or $40 a month on your mortgage payment, you shouldn't buy a house right now. That's what I think. I think you should rent then. If you can afford a house right now, then I think you should buy a house. Like I said before,
so here's the
anytime
question.
that you can afford to buy a house, I think is a good time to buy a house. That's just my personal opinion.
So going back to inventory.
I agree with that.
Okay.
Because you got to put your money somewhere, and
Yeah.
who knows where the dollar's going to go.
Yeah, you're going to nickel and dime every thought of it here and there. I mean, come on, man.
Yeah, but
we
let me
act
say
like
this.
we're all millionaires being able to.
So a lot of people out there think we're biased because we're real estate agents, right? And here's my question to you is this, is that if you're instructing somebody to go put money into a house, we understand this is how we make a living, but sometimes it doesn't make sense. Sometimes, like you said,
You're right. Sometimes it doesn't.
Maybe you want to rent. Check the market out. Mm-hmm. Sometimes it's like, hey, man, I got my money. Inflation's going up. Where do I park my money? And if you look at the hedge fund investors, they're buying cash. This is where I say that $400,000 to $600,000. This is why I say it's hard. And this is what you're really competing against. You're not competing against buyers like that, like you said, Brett. Mm-hmm. You're competing against people, or not people, but hedge funds and big investment companies. Those are the prices of houses that they typically want, and they're parking their money there. So when you're out there and you're looking to buy a house, yes, there's still some level of competition. That doesn't mean you're not going to be able to get into a house. The seller may, hey, let's work together. So going back to your question of 5%, putting that down, you look at the average payment. If you're putting 5% down, you're buying into a $500,000 home. You're probably looking close to a $3,000 mortgage with mortgage insurance, everything included. Now you got to put all those other factors you said in place, right? Does that really make sense to a lot of people, or should I just wait and spend $2,500 a month on rent and then see if rates come down? That's the question.
That's a great question, and if someone's in that scenario, they should definitely be having to come to Jesus talk with themselves of what their best scenario is.
And where they're at. Because just thinking about it, if somebody wants to buy a home, a first-time home buyer, I got 3 kids. I got 2 that could possibly buy a home, or actually one.
Do they need an agent?
Well, he's up in Utah.
Besides, he said if he did, he would. You'd
I
be
know
calling
agents.
me. So I'm just
Dude, I'm totally joking, man.
But
I'm just joking too.
But this guy, this kid is making good money.
Yeah,
he's making real good money and can't afford a home up in.
What's he do?
He's a computer science guy.
Nice.
Yeah. So
smarty.
Yeah, he is.
Smarter than dad.
Oh yeah.
I'm just kidding, man.
Oh yeah.
You're like, oh yeah, I admit that one. No problem.
He's there.
He's still my jeans.
No, but I gave him a place to live, right?
That's right.
But anyway, he's having a hard time. But so I imagine some of these people that are actually making good money, trying to get into a home, they're having a hard time with it. And what my thinking was is if you can come in with not even 5% down, but maybe $5,000 or $10,000 into a house to make that $2,500 or $3,000 mortgage payment.
Yeah,
you could do that because saving is actually losing money at the rate of inflation that we're actually going through right now, right? Because your inflation is going up higher than what the dollar's worth. I mean, it's not. You're not keeping up. That dollar's not keeping up with inflation. So
the power, your purchase power.
Purchase power goes down. Yeah, it doesn't unless you have that money parked in something that's higher than a 10% inflation. So that's my question: is there something that something out there that a first-time home buyer say they can make that $3,000 a month payment? Is there something out there that they can come in with with $5,000 down or $10,000 down to get into it? Because that's
buy down the rate.
Well, here's the difference. You can always do that, and there's programs out there. You usually have to play the game, and what that means is that a lot of times you're taking a higher rate to play the game. You also have restrictions on how long you have to be in the house. What does that do for you as a mortgage payment? Goes higher. What does that do for you as your purchasing power? It decreases because now you're looking at, okay, I got this much of a payment. I wanted to buy a $500,000 house, but using this program, I'm at $450,000. Plus, I need buyer or seller closing cost incentives. So again, I think people just sometimes get discouraged. It's just too much going on. There's a lot of factors into this. Again, some people will buy though, and they need to. And I'm not saying that all buyers are out. You got people from Cali and people from Washington, East Coast, coming from Florida. They're all coming here and they're buying. And sometimes it's a better deal, obviously. And they got a lot of money, cash flow, right, from the houses that they sold with the equity that they built. But that doesn't. Everybody's not in the market and saying, well, this is financially the best time to buy. We all know that.
Right.
Like
a lot of people aren't.
A real estate agent, I'm out here saying, hey, man, I get it. But is it the best time to buy a home at this time? No. But if you need to buy a house because you would rather plant your money or park your money and get into a position.
Hold on.
Go ahead. Go ahead.
You just said, is now the best time to buy a house? No, with authority. Why do you feel that? What if home prices go nothing but up? Or stay the same?
Here's my thing. Do you think prices are going to come down anytime soon?
No.
Okay. So getting into a house.
Well, a little bit, but not my version of that, and some of our viewers' version of that might be two different versions.
Okay. So there's been numerous people out there that say there's a crash coming. Some people say there's slow appreciation. I don't think there's going to be a crash. I think that we are going to decline. Now, is it a market where you're seeing a declining position where houses are starting to come down a bit in some sections and pockets? Yes, we see that. That still doesn't mean it's a good time to buy. And also, if you wait, if everybody's thought process is, okay, we're going to come down for the interim, and then over time we're going to continue to slowly appreciate, then prices aren't going anywhere. They're just going to continue to go up down the road.
Correct.
So now you're looking at a higher price point of a home in a year, 2 years, 3 years down the road. So in that sector or that part of it, that's not a good time to buy for me. Rates haven't come down.
Wait.
Go ahead.
You just proved why it right now would be a good time to buy based off of what you just told me.
Explain why.
Because you just said that if home prices don't go down and interest rates don't go down, that to me is why right now is not a good time to buy.
What I'm saying
if things don't get better, why would later be a better time than now?
What I'm saying is this is an unhealthy market, and I understand it might not be the best market to buy in, and these are the reasons why. It's because of that. So if those are the reasons,
it's not the best market we've ever had. Absolutely not.
I think it's one of the worst markets we've ever had. What do you think? You think it was one of the worst markets we've ever had?
I think so.
Coming out of it, yes.
Okay,
but I think so based off of the last 2 years. So I'm willing to say that I'm not really giving it a fair comparison because I'm basing it off of let's say the last 2 years where it's been absolutely asinine and we've never had a market like that before in our life. But if you're talking about the last 2 years, comparatively speaking, right now is a far better time to buy than then. So that's my relation to right now being a good time to buy, Dan French.
Do you concur?
I got that all in one roll, bro.
I know, man. Hey, man, you were wound up on that one. But, I mean, I think it's like this, man, is that a lot of people still have to make a living, and there's more than enough business out there for everybody. And we're not trying to sit here and give you this sales pitch. I think a lot of people think that, it's really about, let's be real. Let's have a conversation, right? This is why we created this.
I'm not a real estate agent. I'm just
right. But you
doesn't
still
give a shit.
I'm a working stiff,
Yeah, but you.
Oh,
but
yeah,
you know
the
what?
realtors aren't.
Brett, you're not a.
That's not what I meant.
Physically, no, but stress, brother, I'm going to die of a heart attack in 5 years.
Oh, yeah? Well,
Dan wants to get into
anytime
it.
you own a business, it's stressful.
Yeah. I'm just kidding.
Any business is
All right,
stressful.
so let's segue to a part of this I want to bring up. No, it's all good. It's all good. So let's take a look here. So I want to bring this up. This is a chart, right? So this is your close to list price. You can see that at these price points, we're still hitting 100, right? Where do you see the big declines at? 600 to 900, it looks like, and then 900 to 1,000. You're starting to see them come in where they're getting price reductions. This is the meat and potatoes of what we're talking about, especially here over here, the 100 to 150. So this is on a 30-day basis.
See, I told you. You said, what is my info coming from? I said, what I've noticed is that home prices are in the decline. You'll be able to, now's a good.
Yeah, but in
said,
4 to 600, in the 4 to 600 range, they're not. They're still getting it at list. If you go to the range of 800 to 900, I'm sorry, it says, is that 800? Yeah, that's 800.
I can't see that far.
800 to 900, it's actually declining. If you look at 900 to 1 million, that's declining. So you got to look at this.
No doubt they're declining even more. Don't get me wrong.
Here's the other thing. So you look at this, and when you look at this price point in July, you can see that here is where the sales price average is at. and we're at 477 right here. Okay, we were at 490 before. Okay, 490 was the number before, and now we're at 477. I'm going to bring this up. There's the chart. I'm going to bring these charts back up. So look, we're here at 477, 120. Okay, and over here, just in June, we're at 522. Now we're declining. We've seen the average median price at 480. You come in over here and you're looking at these declines. I want to say this. This is the 800 to 900. Here's the 900 to a million. And then this is where you're starting to see these declines, right? This is where you're starting to see the softening in the market.
So you
So
want to, so
it'll
what I
continue its
saw,
way down.
what I saw, and what I was doing back when those numbers were up around 522 and 500 and all that.
I'm putting a graph up here for running at altitude because it wasn't up for some reason, but I brought it back up so you can take a look at it. Go ahead.
I was doing a lot of high-end homes at that
Yeah.
time. I was doing a lot. I mean, it's like it was almost to the point where it's like not another one, But
Yeah.
there was a lot of them. There was a lot of them. Yeah, I mean,
I get
they're
it.
like 7,000 square feet. That was an all-day job,
Bro.
And so what I see now is I see more manufactured homes, more single-family homes that are like under 2,000 square feet. That's mostly what I'm doing now. So back when your numbers were higher, there was a lot of high-dollar homes going.
Well, you could see, look, so
Back when your numbers were skewed.
8 to 900,000, right? I've sold homes at 800,000.
Yeah.
I had a reduction in almost all of them. You can see that it's 100% list to price ratio of what they're selling this house for, all the way across the board. And then when it gets to that 800 to 900,
Wait till you see next month.
800 to a million, and then the ultra luxury, you're starting to see declines. And this is what you're seeing on the data.
But that's what you usually see, right? It's going to start with the luxury, and it's going to work its way down very quickly, too.
Again,
just watch the next couple
what
months
does
when we have this
though?
conversation.
So what does this say? This says that even though the prices are still going up, sales are coming down. In the last 30 days, we're still getting at list for most of the sectors. That's what it says.
I disagree.
Okay, you're going to disagree with data?
Wait till you see the next one. I
Disagree with data.
I know what I see, and I know the homes I'm showing and the contracts I'm getting, and I'm telling you, they can have that all they want, but even
What's your
between 500 and
conspiracy
600,000
theory
there's
on
no
this?
conspiracy
Oh.
theory. It's just that's not kept up to what I'm seeing right now. Wait till you see next month.
So look, the eyeball test is fine. We're giving you on a 30-day, basis of like what's happening.
Wait till the next 30 day comes out.
We'll see. But at the same time, this is in this last month. This is the last 30 days, right? From June to July. So this is the last.
Can we
60
make sure we timestamp this with me saying this?
This
for
is
next
almost
month?
60 days. What are we, 45, 50 days into this now? So you're seeing that this is where it's at. Let's go back and look real quick on this, and I want to bring this up. So this right here is your historic sales price, and you're starting to see it decline. It was in June at 480. Now we're at 477, right? That's the average. And hopefully this continues to come down, where the average median price continues to come down. For a long period of time, we saw it going up. Look this is the first time that we've seen it. Like we saw it decline in May.
But I thought it was just luxury that was
So-
declining.
Yeah, this is where I was doing a lot of high-end homes.
Yeah, this is 500,000.
Yeah.
So where I'm looking at where are the core people buying today? I would say 400,000 to 700,000. That's where I would say.
Yep, me too.
So that's why I'm bringing this chart up, is because it's hitting those people, those numbers right there.
It's going to hit them even more.
Right.
So is this
just telling you, wait
is
till the
this-
next month one.
Is this just in the valley, or is this like Pahrump and Laughlin?
I think it's
or-
all of GLVAR.
Okay,
So like
all right.
Boulder City, Pahrump, everything in Clark County. No, actually Nye County too, because
I also want to bring up the last 30 days of these are high rise. Okay, and this is the high rise number. And I did a quick CMA on what was sold. Wasn't a lot, right? It was like I think it was like 61 homes. And the
61
last
high rises
rises
in
sold
the last 30 days.
in the last 30 days.
What's the average price?
So the average price on this is, it looks like its sold price was at 426,000. The average list price was at 435,000. I'm gonna bring this up for you guys.
And sold what, 426? You said?
No, 426 was the actual sale.
Yeah, but it was 435 was the list.
So the list, that tells you that the high rise sector is starting to come down as well a little bit on just what's sold versus what's list versus not.
That's kind of
Well,
an
I
interesting
mean,
market, though, right?
It is an interesting market, I think.
because it's the ones that I've done. I've done probably 10 in the last 3 months or so, 2 months, and they've all been investors. So they're the high rise, like the Palms and
Cash.
Yeah,
right?
they
A
come
lot
in-
of it's
they
cash.
come
The
in
Palms,
cash.
you can just have them put you in the rental pool. You don't even have to
Well, and that's what they're doing. And that's what
do
most
the
of
property management.
Yeah, that's what most of them are doing.
Yeah.
They just go right into the rental pool. So what they've got cash. You're right. They got cash, and then they just go right into the rental pool, and then they're making money the next
Yep.
week.
And they literally don't have to do anything other than buy it.
No,
So I just thought it was interesting because a lot of people have questions about what's happening in the high-rise sector. We talk a lot about the condo sector and where that's at. I wanted to kind of give you guys a take. A lot of cash. It's very difficult. You
What
have
was
to-
the highest priced one? Does it say?
Let me take a look and see. I got to bring this up.
Just curious.
Yeah, I don't see it says that there's a high price on here.
Well,
the
just
max.
say high. Yeah,
max
max.
is $1 million.
$1
Yeah.
Max $1 million.
And they listed it
that's
at
not-
$1,075,000. It sold for $1 million, so it even came in less, or they bought it for less.
What was it listed at? Sorry.
$1,075,000.
Yeah.
So, again, I mean, it just says that in certain sectors, yes, that
About
it is-
10%.
Yeah, it's coming down a little bit.
93% less or 92%. Yeah. Which I said, normal market, homes will sell within 91, 92, 93% of the list price and be on the market anywhere between 45 to 90 days. Watch.
Yeah, I mean, so for looking at this chart, let's go back over here. And I'm just going to look at all property types really quick, and we're just going to look. So, if you let's look at single family residence here. It's still showing 480, but if you look at the up to date numbers, because this thing, like you said, this info sparks, this is a little bit behind, right? I would say it's just slightly behind. But you're looking at 480. We're down to 477. But I want to go here where you were talking about days on the market, and this is 8 days on the market still in the month of June. Now, I understand we got to get the data for July, but we're still 8 days on the market.
Wait till you see July, bud.
Look at the month supply, though, we talked about is now 2.3. We were at
So do you see how that just went whoop?
that's what
That's what's going to happen
that's what they're
for,
doing.
I'm telling you, it's
For
going to be
what?
the same thing. For
days-
price
days on the
reductions.
market.
Days on the market. For days on the market.
I don't see
for,
that
for next
happening
July.
right now.
Just watch. You're going to see one like that.
So you're saying in a year you're going to see
No, I'm
price
saying
reduction.
next month you're going to see that when it comes out. You're going to see a straight line up for days
what?
for days on the market for a home.
Okay, and what
You say it's
reason-
only 8 days right now. I said next month you're going to see it.
So
be a
my
straight
question
line up.
is, why do you say that?
because I know what I see. I mean, I'm on the MLS every single day.
understand
I'm
that.
looking
So what
at
is-
all different
what is
areas and
giving
all different
you-
price points.
What is giving you the idea that this is happening, where you're seeing?
Because I'm seeing the price reductions, man. Everything
I
I'm
know.
telling
I
you.
would think that you were seeing homes sitting on the market a lot longer. Some of
I
these
am.
Okay, is that what's contributing to
Yes,
it?
that's
Okay.
and I'm seeing price reductions with a lot of them immediate. Like they're on the market for 10 days, 2 weeks, they're dropping it. It used to, normally, or I should say a lot of times, it's usually about 30 days, 45 days before a seller will do a price reduction. And so the ones that are doing it, I'm
actually-
seeing to do it right away too.
I was looking up some information on a home that I was going to do an inspection on, and it was on Zillow, because I get all the information off Zillow to do the inspection. And then it started out at 490, it went 470, went 450, and that was all 10 days apart.
Yep, told you.
So it's but that's only certain properties, I would
That's-
think, right? I mean, it's not just. I mean, that might be an outlier.
So
of
I'm
a
not
property.
saying dropping that much that quickly, but ones that I see a lot. I don't know what the percentage is, but I'm saying that a good fair share of ones that I'm seeing that are doing price drops are doing it within the first couple weeks, and then waiting maybe like another 30 days, 45 days, then another one.
It was all within 10 days
Yeah.
to 2 weeks that they were dropping. They just dropped it $10,000
Yeah.
each time.
I'm not saying they're dropping at half the price, but yeah.
Yeah.
Yep.
So let's go over here. I want to just go over this last browser here, and then we're going to get into the show here in a second. We're going to talk to Doug here, but you look at pending sales. You look at that. That's 2,154, and then closed sales is 2,693. So again, you have new listings, which everybody wants to see. You have 5,020 new listings. Okay, so that's pretty good. I mean, look, we are seeing an increase overall supply here in Las Vegas, Henderson, Summerlin area. I have a question here that I want to bring up. James Hughes brought up the fact that housing prices and interest rates will not go up at the same rate. I would agree with that. Right?
I would agree too.
Right?
Absolutely.
I mean, because that's probably a death sentence.
killer.
Yeah, it'd be a death
Yeah.
sentence to the economy. I think if
He's right.
both of them
Or
went
I
up
agree
at the
with him,
same
yeah.
time. So that's a good point.
Yeah.
Good comment there. Also, running at altitude said, I agree with Brett. I am seeing home price reductions within a week or two. So there you go.
Yeah.
You got running at altitude agreeing with you.
Does he live here in Vegas?
No, you're gonna go give him a gift card?
Dude,
or
I
what?
want him to go running with me. He's a running in altitude. No one ever says, "Hey, you want to go running?"
Dude,
probably don't like me. He's like, dude, I got to put up with this dude on a podcast. I want to fucking run it. I'm a lot more chill when I'm running.
All right, so we gotta kind of move on, but I think we're giving a nice analogy of what's happening in the economy here in Las Vegas. Also, kind of giving our synopsis of what you think is going to happen here in the near future, maybe in the next 30, 60 days. I always say look at this market, 30, 60-day levels, right? You don't go too far out. You just kind of see what's happened previously, maybe 30 days before previous, and then kind of give your take. It's very difficult. I mean, if we all knew what was going to happen in this economy, we wouldn't be working here, right? We wouldn't be real estate agents. You wouldn't be doing home inspections.
I'd be on the beach I owned, But
I do think that the data and the experience, and you blend it with what's going on with people, and also the willingness to buy, psychological things that you go through with people. I think that does kind of give you an idea from a perspective of a real estate agent in the market to kind of say, hey, here's my opinion. This is what I think is going to happen. Doesn't mean it's right, but I can say
more of an educated guess.
Yeah, I'm sure a lot of people disagree with me. I'm just going based off of
I disagree on 90% of what you say, but I mean, that's okay.
And you've done this like a year, and I've done it 17, so it makes sense to go with you. I'm just kidding.
But you know what, Brett? You don't
Throwing
know.
shade.
I know, it's all good. So what were you going to say, Doug?
No, that was it. I was just
okay.
Sorry, man.
commenting on
That's all right. Also, let's go ahead and go over to Doug here. Doug or not?
Yes,
Doug
sir.
or not is
Do the doogie.
Las Vegas home inspections. You guys are out there looking for a home inspector. This guy's top notch. He will go through. He'll spend the day with you, your family. He'll take you out to dinner. No, I'm just like,
Easy.
but he'll be.
He's a matinee kind of guy.
He will definitely help you guys out. So let's talk a little bit about what you're seeing. What things do you want to bring up that maybe you've seen this last week in home inspections?
Well, they've been pretty run-of-the-mill houses. They're, I'd say, pretty much.
Any surprises?
No big surprises. It was, what I see a lot of, the standard things that I see a lot of is broken roof tiles.
Yeah, that's the number one thing for me.
There's always, and people going to look for a home or selling a home. You're probably gonna find on the report. There's probably going to be a few broken roof tiles.
I tell all my buyers from the get-go, when we go to the inspection, I tell you right now what's going to come up: broken roof tiles.
And the reason, and
so don't be surprised.
And the other thing is that buyers have a tendency to always be looking up at the ceiling. They want to know if they have leaks. Well, we live in a pretty dry state, but a lot of people come in from out of town. And so I walk the roofs. I actually walk them. I don't do drones. I don't.
Yeah,
like
that's
the
good
drones.
about you, because everyone else that I know does drones.
Yeah,
you actually walk them so you can see.
I walk them. I check the flashing at the penetrations. And sliding tiles. Look under the eaves. And I just kind of do a general overall. And if anything's cracked, I call it out. But then you go into the attic and you look in the attic and see if you have any stains or any staining going on and that kind of thing. But you can always pretty much tell by the condition of the roof on the outside whether you're going to have any issues on the inside as far as water damage goes. But the other thing is the other big concern that people have is water damage. And that's one thing that I do see. I see past stains, what the issues that have had a problem, or things that have had issues, and stains or whatever. But I'll go and put the infrared on there and put the moisture meter on there. If we ain't got any water in there, it's a past stain, and you just paint it and keep
so
watching
that's the
it
thing,
and
right?
monitor.
There can be water stains, but the point is the source of where it came from repaired and fixed.
Yeah.
And is it completely dry now? Correct?
And for sellers, be upfront with everything that's gone on with the house. I've had, when they get when they do the SRPD, and there's been repairs, like a garage that had all sorts of repairs, and then it had some staining in it after they did the repairs. It's like, it should be on the SRPD. Just be upfront.
Have you ever seen an SRPD before that was so just completely different than what you actually you're like, dude, the seller didn't disclose.
Every SRPD that they send to me has two things on it, and they're superfluous. They're just.
So let's say this. So let's talk about it. Seller's real property disclosure. What you're talking about, because people have an abbreviation. Sorry. You guys can't just throw. But
Sorry,
here's my
man.
thing. It's really, as a seller, you're supposed to fill out, to your best of your knowledge, if anything has
any
happened.
problems with the
anything-
house.
Yeah.
I got a question on something. So
Yeah.
we recently had a SRPD filled out, and there was an issue where next door there was a tree going from the next door neighbor was going into the roof, and it caused two roof
Tile
Tiles.
damage.
Yeah.
So my question is this: is that if that happens, does the seller? I mean, does the owner of the house go to them and say, "Hey, you need to repair that," or what really takes part in that?
I think, a little bit of common sense and courtesy goes a long ways. The seller could see, it's one of those things where you're just checking you want to look at your property every once in a while anyway to see what's going on with it. You don't want to just put it on autopilot and let it go.
Yeah.
So, I mean, if you see something like that happening, go to your neighbor and say, hey, listen, your branches are hanging on my roof and I think it might affect my tiles. Do you mind having a landscaper come by and cut them? Whatever. But if it has already happened, say, hey, you broke a couple tiles. And, it's not like confrontational type of conversation. But it's go over and talk to them and say, hey, listen, you're doing, your shrubs are doing a little damage to my
Ultimately,
roof.
your realtor is going to be dealing with it.
Well, I get it.
think,
And that's fine. That's part of
Well,
what
I
we
think-
do is resolve stuff like that.
yeah, but yeah.
I mean, the seller can
It's
go over
true.
and talk to them, but what if the neighbor's like, nah, I'm not doing squat?
Yeah, what if the-
Ultimately, it's the
yeah.
seller and the listing agent that need to take care of that issue.
So
Yeah.
here's my question: is do you report that issue? And obviously, you have to, that's where the whole psychological. We have to,
Well,
control.
you can't report it if you don't know about it.
Well, what if the seller did know about
Then
it?
he should have reported
And
it.
then he should report it, right? So
Absolutely.
these are things that people really
Yeah.
don't probably put in perspective. Oh, yeah, I fixed it. Yet that branch is still hanging there,
Yeah.
right? And it could still potentially affect those tiles in
Yeah.
the future.
I would say probably 80% of the people that own homes, I'll probably get in trouble saying this, but 80% of the people that own homes should probably have a qualified professional do the repairs on their home.
Yep.
Because I've seen so many things that are done incorrectly.
Yeah, but where does that-
traps
Yeah.
traps that are set improper traps under sinks and no traps under sinks, and they don't know.
So when they go to
don't
sell
know.
when they go to sell it, it will come up later or it won't. If it's a seller's market, it won't be an issue. If it's not a seller's market, it will be an issue.
Yeah. Oh yeah.
Basically.
Yeah.
So in this market, is that going to start becoming an issue?
Yes.
Right.
Yeah.
And that's
Absolutely.
why I'm bringing it up.
Because
Is
you got
because
That's what I mean
DIY
more
type
about
of
buyer's
things,
terms in this market.
Yeah.
Absolutely.
Yeah. So I guess my suggestion is if you really think you can do it, but you don't know if you can do it, and if it takes it, YouTubing it or whatever, maybe you should have a qualified contractor.
Electrical
coming
or
into it.
plumbing, you should probably
Electrical, plumbing, I'd always
maybe
recommend.
maybe
Unless
a
you're an
leak in a sink,
electrician or
not a big
plumber.
deal. But anything
Yeah.
electrical, man, you could kill yourself.
Oh, yeah.
That's the difference between that and
Electrical
every
or
other trade.
plumbing, have a licensed contractor come in and do the work, or a handyman. Handymen are actually licensed to do that kind of work too. So yeah.
So it's just
I
spotty
see-
work a lot of times is what you're saying, that you're starting to see a
It's-
lot of people that are just doing. Is it because they can't afford those like, because look, man, everybody has a business. We can go into
Yeah.
this deep,
Yeah.
but maybe people are trying to shave costs. you know?
Might be that. Might be I'm not going to hire someone now. I can do it myself, and they
yeah,
think
I-
that they can just do it themselves quicker.
Well, I
and
think that's
who knows.
most of it is and I'm one to say, hey, I don't know how to lay block, so
Mm-hmm.
I know how to lay it, but I've never done it. And
What
I'm
about
not-
laying pipe?
laying pipe? Yeah. Well, that's a little different than laying block.
3 kids later says he's a goddamn certified expert on that shit. Right, Doug? Certified pipe layer since
Yeah.
college.
1997.
Since 1997, certified pipe layers association.
Sorry to interrupt you. Go ahead. What were you
Pipe fitter.
saying?
Yeah.
You can't say that around me.
Yeah.
I'm gonna bring it up. So.
Yeah. So, but it's like I'm going to hire somebody to come in and do the work. Even if I know how to do it, I'm going to hire somebody to come in and do it. Yeah.
All right. So just
Anyways, we gotta go, people.
all right. So anyways,
Glad I came in.
anything else you going to talk about with home inspections? Like what's going on in here?
Yeah. No, just that's a main thing. It's just like there's a lot of common things that go on, and if the seller's real property disclosure. If you're selling a house, put it on there. It's not going to make a difference one way or the other because I'm going to find it and it's going to go on the list.
Have you had any experiences recently with women showing up like kind of giving you those invitations as you were talking about before?
So Dan is currently trying to get Doug divorced.
We don't got to answer that question, Doug.
Jesus Christ, give me your man card. You're done.
I put Doug on the spot here. I just wanted to see his reaction. So anyways, guys, Doug, you got anything else to say?
That's it.
Enough damage is done. We gotta go.
I gotta.
All right, I got a couple of questions I want to go over real quick before we end the show, and then we're done here. You look over here, and Veristar said that there's going to be a crash happening. Everybody's trying to predict when a crash is going to happen. Nobody really knows, but he feels like it is going to happen.
You know what? I think there's going to be a big economic change. I don't know if it's going to be a crash, but I think there's going to be a big economic change.
Yeah,
I think.
I agree. I mean, something's got to give. That's the way I look at it. Period.
You're going on a leveraged, freaking pole that's way out there. And I agree with them. I think
just because
you got Bitcoin and you got gold that are coming into play.
Yeah.
And I think there's going to be a big economic change.
And I think that just because home prices don't drop, or even if home prices don't drop, doesn't mean that your purchasing power isn't going to be a hell of a lot less. That's the thing. Yeah. So home prices might not, because of simple supply and demand, or whatever reasoning,
right,
or investors coming in and snatching it up. But regardless, even if home prices don't drop that much, it doesn't mean that our purchasing power isn't declining and going to be declining a lot more.
Right.
And something might hit on that is completely has nothing to do with. I don't know.
Yeah.
We'll see, man. I just know that it's kind of uncharted territory in a lot of ways.
Too far leveraged.
I'm going to say this.
I think the dollar is going to dictate what because in 2008, I was told the dollar was.
We should have Ver back in here to
we'll bring him back on. Thanks for the comment there, Ver. Want to also bring up, we're going to talk here a little bit about another question here, and then we're going to end the show. So DJ said, hey, Dan, so you see VA rates drop yesterday? Yes. I'll get to the numbers on that. A lot of times it's dictated on margin. Talked a little bit about the discount, which is a very high discount. I'm not going to say the company. But, again, we're seeing things start to come down. There's still margins in place. People don't understand banks are off of margins and how much they can really take on, because there's no profit if they don't have a margin. So a lot of times there's going to be a discount fee or a discount cost that's a lot higher. So I also want to bring up, sorry about that, but we also want to bring up one last thing here. So hopefully I've answered that question for you, DJ. We'll discuss that information on VA and what's going on with the rates and the bond there, the 10-year yield. Also, let's go back over here. So I want to bring up a couple of things one last time here. So again, LV Home Professionals, check us out here. If you guys are looking to buy a home, great place to get started. Please go here. Just get registered. We're not going to hound you and pressure you like most of these people do that are realtors out there. Also, price reductions on homes and also open houses. What?
We're going to be like Glenn Lerner on you. One call, that's all.
That's it. See, my thing is this, man, is you got to think about it. Like, if I was somebody out there like that I was going to go and buy a house, I wouldn't want people calling me all the time. I would give you a shout.
That's why people don't fill out info.
Right, and that's why they don't fill it out. But if you're interested in something and I could put you on a search and it doesn't hurt you and it's kind of like, hey, man, you're disarming me because now you got what you wanted and you call me when you're ready. That's kind of what we're looking at here. Also coming soon here, we have properties that are coming soon on the market, and also find out what your home's worth. Like I said, somebody just filled this out last week. We have somebody that's doing a listing now. I'm really excited.
We got a
live
one, Dan.
We got a live one.
We got a live one.
Yes, we reeled that one in.
How'd
you figure that out, Brett?
I'll let you do it.
Right. Anyways, guys, that's it. You guys have any questions, comments, all the links in the section below. Please like the channel, subscribe, hit the notification bell. Brett and I are both real estate agents. If you want to seek our services, definitely reach out to Brett. He has his own Instagram channel. What's that, Brett?
Vegas Crypto Agent.
There you go. All right, guys, that's it. We'll see you guys at the next show on Tuesday. We have the water guy coming on. He's the guy that we bring in.
The water guy.
Brunson's back. We're going to talk about Lake Mead and looking at NASA. And if you guys seen these images, we're not going to go into it, but it's just astonishing how much water has depleted.
From where?
From Lake Mead.
Really?
Yeah, we're going to talk about that with him on Tuesday.
Is there any proof of that?
Images, I guess. I don't know. Is that enough?
Bodies in a barrel.
I won the sarcastic award. Thank you.
I don't know. You tell me, Brett. Anyways, guys, we're out of here. We'll see you guys at the next one.
Thank you for watching the French Workbench Podcast. You can find us here every Tuesday at 6 p.m. and Saturday mornings at 10 a.m. to find out all the information on real estate and financing here in Las Vegas. Also, check us out on our LV Home Professionals website. You can find your future home there, a lot of good information, and you can find us on audio-only options through SoundCloud and iTunes.